Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Mullen Automotive, which is an electric vehicle manufacturer. And today we are going to be going over the hard truth. Please keep an open mind to the information I am sharing with you because I'm trying to save you money. So in this video, we will be analyzing a plethora of various news articles as well as the future price targets of Mullen Automotive regarding where the company could be in the future. We'll be starting off talking about how Mullen has announced key hires across various electric vehicle programs. So we're going to start off quite bullish for this company. Then we'll move on to talk about 4 reasons why investors may not want to invest into this company if they are not aware of at least these 4 things. After that, we'll talk about how there are 3 electric vehicle companies on the stock market right now that have essentially a very low chance of making it all the way to the finish line and could potentially go completely out of business. And of course, I'm going to be giving my own thoughts and opinions as well on each of these articles. And then lastly, we will be going over the last 3 things investors should consider before even making a speculative investment into Mullen Automotive. So if you're still here and you have an open mind and you want to hear both sides, don't forget to go ahead and smash that like button right now, comment your thoughts down below, subscribe if you are new, and please keep your mind open to this information because I want what's best for you. And let's get right into it. Mullen Automotive is an electric vehicle manufacturer and they currently trade for just 32 cents per share. Mullen is an emerging electric vehicle company that has recently announced a number of new hires which have joined the company across its commercial van, its truck program, and its Mullen 5 EV crossover programs. So this is pretty positive for the company and I like this development. The CEO and chairman of Mullen Automotive says, and I quote, "It's exciting to see the growth across our different teams and locations in California, Michigan, Indiana, and Mississippi." He goes on to say, "Strategically, we have been adding a very strong expertise coming from tier 1 suppliers, traditional original equipment manufacturers, and other electric vehicle startups. It's very encouraging to see so many strong candidates reach out to us looking to join the Mullen team," end quote. So overall, I would say this is a pretty bullish development for this overall company. So what do these new hires bring to the table? What are their talents? Well, Mullen's new team members come from a variety of well-known automotive brands which are pretty cool. For instance, they're coming from Volkswagen, also known as VW, Joyson, General Motors, Hyundai, a few smaller vehicle makers and truck makers, Ford, Stellantis, Hyliion, and Electromechanica. So clearly they have a very well diversified portfolio of talent in their overall company. If you want to look on screen right now, I'm not going to go through everybody, but we have their product development team, which seems pretty strong, coming from these fantastic companies, as well as their commercial sales, service, and parts team. So I would say that this is a very bullish, positive development for Mullen Automotive. If you don't know, I personally am not invested into the company due to some of the reasons we will talk about later in this video, but on the surface I would say this is a positive development for Mullen Automotive, and I really hope this company can make something of themselves in the future. So now let's move on to the juicy bit of information regarding Mullen Automotive. The author starts off by saying that many articles are being released about Mullen Automotive, and it's stirring up social media to where all of these investors who really don't know how to read financial reports, they don't know what a cash flow statement is, a balance sheet, or even an income statement, they're not familiar with accounting ratios, and they haven't gone to business school, so they don't really know how to accurately value a company, which is not their fault even in the slightest, but I would expect them to keep their mind open to some opposing material for this company. The author says that this has made somewhat of a cult following for this company because people just want to see this company go to the moon, and I personally think it would be cool for the MULN share price to go up that high and for people to trade this company and get in and get out and get some profits. I'm not against that at all. But what I am against is ignorance and people that are buying a company that they truly don't know. So there are 4 main critical pieces of information that many people seem to be oblivious to. We'll just start off with the first 3. The first reason is that the CEO has a long history of companies being delisted or completely going out of business, essentially essentially he's a failure at running companies. The next reason is that the company has allegedly announced deals that aren't very impressive once you dive into them, even though they seem impressive on the surface, and we'll be diving into those as well. Next, the company allegedly has inadequate financial resources, and I've harked on that for a while now. Go back to my first Mullen video, and I said the huge problem with this company is that they are not financially strong. Lastly, we want to see what investors want from this company and if Mullen is a good investment or not based upon their either fundamentals or future growth trajectory. Well, first let's start off with the CEO's track record. The CEO, and I quote from the article, has led 5 failed penny stock companies prior to Mullen Automotive. 2 of these companies have had their securities registrations revoked by the U.S. Securities and Exchange Commission, also known as the SEC. On top of that, the other 2 companies voluntarily terminated their securities registrations because the companies were complete failures, and then the last one that he led merged with a speculative gold mining company. So he literally couldn't reach the finish line, and he decided to give up on it and just merge with another company. So literally, the CEO has a track record of multiple failed companies, and many investors believe that Mullen will be his next one. Essentially, he's making money really quick in these companies, gathering up all of these shares, selling them to make money, and then having the company go out of business or having them unregistered with the SEC, and overall, it's just not good. Also, I want to highlight that a company called EV Grid actually has denied the CEO's claims regarding Mullen's battery technology. If you don't know, Mullen is trying to innovate and develop a solid-state battery which gets a lot more miles than other electric vehicle companies on the stock market right now. Mullen's CEO says that their batteries can deliver almost double the mileage of other top electric vehicle companies. However, the company named EV Grid has denied and called the CEO a liar, that Mullen does not have access to this technology. In addition, the CEO also said that the company would start selling these batteries in the next 18 to 24 months. We've also heard little to no updates on this battery technology over the last 6 months. So if he wasn't lying about this battery technology, hopefully we would have received some updates. But because we haven't received any updates, it just goes to show you that this could just be smoke and mirrors to hopefully attract more investors into buying into Mullen stock. The CEO also stated back in March of 2022 that Mullen was going to reveal a Fortune 500 customer buying their electric vehicles. However, we are now well over 8 months later, and the CEO has never revealed who this Fortune 500 customer was. This information was never released, so essentially it's like he's making this up as well. However, we don't know for sure, but clearly there is no evidence of Mullen landing a Fortune 500 customer, because if they did, you would think they would flaunt that information to hopefully attract more investors. So that's reason number 1. The second reason is that Mullen's recent deals don't stand up to scrutiny. Mullen has announced multiple deals of buying companies and other electric vehicle manufacturers. However, many of these companies were already going out of business, and Mullen just decided to acquire them just to get into the news. Mullen also disclosed that it would sell up to 600 Mullen Class 2 EV cargo vans over the next 18 months to a quote-unquote Amazon delivery service partner. So they're not delivering it to Amazon, but rather an Amazon partner. So let's look into this deal that they supposedly landed. Well, this quote-unquote Amazon delivery services partner only employs around 12 drivers that own a grand total of just 6 vehicles. So although this sounds like a good deal on the surface, it's really not. So they're hyping it up as if it's a huge Amazon partner, but really it's not. Again, this is misleading investors who don't actually dive in to the data and instead just hear, oh, Mullen landed a new deal, that's good news, let me invest. I'm trying to save you money here. At least be open to this and do your own research. The third reason that the author highlights is a huge one, and that's their lack of adequate financial resources. Mullen just has around $54 million worth of cash on their books, which is a very tiny amount for a company that's undertaking the immensely expensive task of building electric vehicles. However, I do want to say that it's good that they have some sort of liquidity on their balance sheet. However, this was financed through debt and through shareholder dilution. How we know this is that Mullen's share count has ballooned out of control from originally coming in at just 23.4 million to now 1.7 billion. And according to the recent shareholder meeting, they want to increase this more, up to potentially around 5 billion or more. So what the company is doing is they are diluting shareholders. Essentially, they are taking money from shareholders and putting it into their pockets, making their company seem much stronger than it actually is. The company's reliance on using stocks and debt to raise money is causing a downward cycle in their overall share price. Just look at the historic stock chart of this company. Zoom out 5 years and tell me where the company is headed. It doesn't take a genius or a financial advisor or someone like me who went to business school to tell you that this company is not doing well. They are not a good performer and the share price is headed further down. Reason number 4 that the author highlights is that there is no big-time investors into this company. And we don't mean finance companies when we say this. We mean other large corporations who own a company in this particular space. For instance, we have other electric vehicle startups such as QuantumScape, Arrival, and Rivian, which are backed by UPS, Volkswagen, and Amazon. These are huge backers of these various companies, but Mullen doesn't have pull with any of these companies. So essentially, Mullen is very likely to run out of money soon, which means they are either going to take on more debt, drowning in the amount of money they are going to have to pay back, or they will have to dilute shareholders, which means the share price will go even lower, thus making investors lose money over the long term. Now, there are some larger finance institutions that are exposed to this company, but that's just because Mullen is a part of a few indexes that these larger companies own. That means when these larger companies buy into those indexes, by default, they buy Mullen because Mullen is a part of that index. Here are some other reasons that you may want to rethink Mullen Automotive, or at least don't get burned on this company. Your money would do far better if it was invested into ticker symbol VOO, which is an ETF that tracks the S&P 500. So let's go down here and look at Mullen. So there's good news, of course, where Mullen has partnered with Loop Global to quote-unquote build the next generation of public and private EV charging technology, infrastructure, and network solutions. On face value, that's a good partnership. I like where they're headed with that. If you are an electric vehicle company, you should clearly establish an EV charging station infrastructure to charge your vehicles. On top of that, Mullen lacks the financial flexibility to actually build out a large charging technology infrastructure network for their electric vehicles, and their partnerships are actually preventing them from achieving substantial growth because the partnerships or acquisitions they are making, Mullen is spending money up front to do these things. So essentially, they're investing up front to hopefully pay off in the back end, but really what they're doing is they're just trying to land deals so they can pop up back in the news to where investors are like, oh, they're making more moves, let me invest more money. Mullen then takes the money that you invested, pockets it by selling their shares, and then the share price moves even lower. So essentially, I don't want this company to use and abuse you. Think about this company, or at least be open to these various developments and do your own research. Lastly, we want to talk about 3 things that investors need to know about this company. Some people are mulling it over, if you will, whether or not Mullen Automotive is a good buying opportunity. So clearly Mullen is a very risky electric vehicle company that I personally am not investing into. But at first glance, some people will still think that this is a good addition to their portfolio as a small speculative position because they believe the company could potentially surge in their overall price. They're thinking, perhaps, that its low stock price allows me to gain a lot of shares, and with their low market cap, the worst case scenario could be that news comes out about this company, the share price increases, and then I sell it. Or the best case scenario is that the company actually works out and the share price goes to the moon. However, let me refute both of these lines of thinking. There are 2 things to consider here. 1. Mullen is highly unprofitable. They're drowning in debt and they are diluting shareholders. If you were to invest into the company, right now would not be the time to invest. If anything, you should wait for this company to prove themselves at least a little and then invest. The company is not manufacturing vehicles on a large scale. They are not selling vehicles. They are not delivering vehicles, and they are not profitable. They are drowning in debt. They are diluting shareholders, and they're purposefully forcing their overall share price down due to management of the company selling their shares. Why is management selling their shares? Because they don't believe in the long-term prospects of the company. The management of this company understands what they're doing. The CEO has done this 5 other times. He's getting shares, he's liquidating them, and then he's leaving the company for dead. On top of that, Mullen reported an operating loss of around $97 million. That's insane for a company whose market cap is literally in the hundreds of millions. I also want to say that it's not like they're getting better in terms of their operating loss. 97 million is actually 4 times higher than the loss that they experienced last year. So they have no business acquiring other companies or landing any types of deals that are going to put them into more debt. I also want to make you aware that management themselves have issued a warning saying that the company is expected to continue incurring heavy losses for the foreseeable future. Essentially, they don't even have projections about when the company is supposed to become profitable. Please think before you invest into such a risky growth company that hasn't proven itself at all. Thirdly, and finally, let's destroy the bullish case. Again, I am not a hater of this company. If this company proves themselves, I personally would invest into this company. Why wouldn't I? But unless they prove themselves, I have no business investing into a company who is not focused on making me more wealthy. By not increasing their share price and doing the exact opposite through share dilution, taking on debt, and or becoming more unprofitable as time goes on, why would I invest into a company like that? Now, you still might be thinking and holding on to the bullish case of Mullen to where their Mullen 5 electric SUV will far outweigh any near-term risk or losses or even share dilution as long as I just hold this company, or if I traded this company quick enough, maybe I can make some profit. Well, let me tell you that it's highly unlikely that Mullen can obtain any necessary traction to scale up production. Essentially, they can't sell their Mullen electric vehicles if they don't even have the funding to actually produce these vehicles on a substantial scale. Mullen will need billions of dollars in addition to the mountain of debt they already have now. This is different for other EV startup rivals such as Lucid Group and Rivian, who have backing from very wealthy investors, private capital investing, as well as the Saudi Arabia Wealth Fund on top of Amazon backing these companies respectively. So clearly, the investors into Lucid Group and Rivian have investors with deep pockets, which Mullen does not. Clearly, there is a main takeaway here. This should put the nail in the coffin for you. Recently, as I reported, Mullen Automotive will enter a reverse stock split, causing their share price to go from around 30 cents up to around $5. This is not going to make you richer because the reason they're doing that is they are lowering the overall amount of outstanding shares, so each share now carries more value. However, the problem with this is that after a reverse stock split, it's going to make it so much easier for people who are shorting the company to short it even harder, which means it's going to bring the share price even further down, pushing it well below back into the penny stock range. So if the reverse stock split goes through, which it will according to the last article and their latest news updates, the company will go to $5. No one will be any richer for it because it's a reverse stock split, and then short sellers and short investors will short the mess out of this company, causing it to fall all the way back down to a penny stock, further screwing over Mullen stock investors. That's why the best move right now is to clearly stay away from Mullen Automotive, at least until they prove themselves. So with that being said, I hope you enjoyed. Go ahead and smash that like button for more honest news updates just like this one. Subscribe if you are new, and I will see you in the next YT video.